Have you ever bought something thinking this is a great deal, only to find out later that there are hidden charges all over the place? That is exactly what's happening in the world of mutual funds right now, as we speak. Most people think they know that what they're paying is what they're paying, but in reality, the bill is much bigger, and it's hidden all over the places most investors would never see. In fact, in 2016, the Dalbar study showed that investors consistently underestimate how much they're paying in mutual fund costs, sometimes half or more. Imagine thinking you're paying 1% and you end up paying 3 to 4%. That's insane. Over decades, the difference can mean tens or even hundreds of thousands of dollars. So today we're going to break down 6 different hidden costs in mutual funds and show you what you might be really paying. Let's get started. Like crazy. These are just things that people don't think about because you're not thinking about how to run a mutual fund when you invest your money. These transaction costs, if you're invested with $250,000, it's on average 1.44%. That's $3,600 a year that you're paying that you don't know about.
I cannot tell you the number of times I've been in an appointment. Sometimes they might go, whoa, my guy's charging 1%. Well, here's all the mutual funds and ticker symbols. And I'm like, what are you paying for those? They have no idea.
Welcome back, everyone, to the Legacy Life podcast today. We are here on a beautiful Monday.
We are.
Mm-hmm.
It is a nice fall day.
Yes. The leaves are falling a little bit too quickly.
They are, because, it's not technically fall till, what about?
Next week.
Next week.
Yep,
yeah.
next week.
But still, we usually see around early October those leaves fall, but they're already going. So, but it is nice to see. It's still a nice temperature outside, but it's one of my favorite times of year.
Yep, it's a beautiful time of year.
I like we speak of apple orchards here all the time. I can't wait. We're going to start going and get some cider.
It's orchard season.
Yep, donuts, and can't wait.
Although the cold is nice, like snow and the cold, it's all nice until after the holidays, so like after New Year's. And then it's like, okay, we can be done with this
Then
now.
it's endurance until spring.
Yes, exactly.
Yeah.
But, so everyone just heard that intro, and they're probably like thinking, are they legit right now? Like, am I paying 3 to 4% in the mutual fund that I'm in right now?
Yeah.
And the reality is we don't know because we don't know what mutual fund you're in, but we're going to go through a study that shows the averages and different statistics that they found. There are a lot of hidden costs in these mutual funds. Yeah,
and I think a good resource too, I think we've mentioned it in other episodes, but you can go, it's a Forbes article, I think around 2011, 2012 was put out, just as relevant today as it was then. It's called The Real Cost of a Mutual Fund, and it goes through and breaks down a lot of the stuff we're going to go into detail here today. So it's just another reference. Maybe we can even put a link to it in the show notes. You can access it.
Mm-hmm. Yep.
But for sure. There's I would say out of the 6 that you had mentioned we're going to talk about, one is probably the most known if someone does know about what some of the expenses. The first one we'll talk about is probably the most known. The other 5, not so much. So we'll kind of get into that.
Okay, sweet.
All right.
Yeah.
So, when you're in a mutual fund, you're obviously, people are buying them because that is typically, like we know that about 65 to 70% of all advisors are selling those, and about 90% ETFs. So people are pretty familiar with the concept of I'm putting money in a fund and it's buying a whole bunch of different types of investments, different companies, some international, some domestic, all over the place. Just depends on the kind of fund.
Yep.
We're diversifying your investment. And one of the known costs in the mutual fund is something called an expense ratio.
Yep.
So if you go to Morningstar, look up a report on, you put in your ticker symbol on the fund you're in, you pull up a Morningstar report, it'll probably have in there, the expense ratio could be 30 basis points, 60 basis points. But the average U.S. stock fund is around 90 basis points.
Okay.
And so basis points means, like, if it's 0.6, it means it's 0.6 of 1% in cost. And the average U.S. stock fund is about 90 basis points. So 0.9 of 1%.
Right.
Okay, on an annual basis.
And so is that when someone says, oh, well, I already know what I pay in my mutual fund, and it's like they charge 90 basis points, let's say, like 0.9%.
Okay.
what fee is that? Like, are they just talking about the advisor fee? And then why are they not talking about these other fees?
Yeah, so it has nothing to do with your advisor.
Yeah.
Okay, that their charge is separate. That's what they're charging you to be your advisor and to give you advice and
Right.
manage your accounts and so forth. This is the fee that the expense ratio that the fund is charging you to
Okay.
be in their fund. So that is separate. You know, if you're in a mutual fund, there's fund managers somewhere, Wall Street or they're managing all that money. Your advisor's not managing that money.
Gotcha.
Okay.
Okay.
And so if you have, $250,000 and they're charging you 90 basis points, it'd be about $2,250 a year in just the expense ratio from that. Okay.
Yeah.
Just for starters.
Yeah.
So that's just the tip of the iceberg though.
Right.
Because you go to the Morningstar report, they're going to show you the expense ratio, but that's not all that's being charged in the fund itself.
Right.
There are other, what we call the transaction costs as well for being in the fund. And that can be broken down in, several different categories, which we'll do here. And this is where most people's jaw begins to drop, is when you start explaining this part to them. And again, I want to be real clear here. We're not saying that all mutual funds are necessarily a bad investment,
Right.
but I think it's important for you to know, what you're paying if you're going to be in that investment.
Right. What is the real cost?
Right. So there was a study done by Edelin, Evans, and Cadillac. Sounds like a law firm.
It does, yeah.
But mutual funds rack up an average of about 1.44% per year in just transaction costs.
Wow.
Okay. And they're not listed in the prospectus. You won't see them spelled out anywhere, but they break down into what we call brokerage commissions. So every time your fund manager buys or sells stock inside the fund pays a commission for that to be done. So think of it like swiping your credit card. If they're making 300 transactions a day, or if they're using supercomputers and algorithms to make the trades, it'd be can be making a lot of transactions all at one time. They could be paying a lot of different costs. They pay,
and you don't see it. It's almost like when you go somewhere to go pay for something, they say, if you use your card, there's a fee.
Right.
You know what I'm saying?
Mm-hmm.
There's that transaction cost. It's the same principle. The same thing is happening when you're transacting business within a mutual fund.
Right, exactly. And so there's that. So to use an extreme example, if your fund had a 100% turnover, they replaced all their stocks once a year, it'd be like emptying out the closet and rebuying a whole new wardrobe the next year. You'd pay transaction costs on that. But the truth is they're making transactions all the time, and you get charged for that.
Yep.
So the other is what we call market impact costs. So, and this can be more like the cost on opportunity, because it does eat into the returns sometimes, because when you're in a mutual fund, they're managing a large portion of dollars. Okay, it's not like just a couple 100,000 here. I mean, they're talking billions of dollars. There's lots of people that are invested in this. So when they buy or sell, they're usually buying a large block of stock. Okay, and so when that happens, it's not like you and I on our own. If we wanted to get in or out of the market today, we could.
Right, exactly.
But a fund manager can't just do it all at once, because they're like on an aircraft carrier. I'm on a speedboat. I can make a turn pretty quickly. It takes amount of time to move if they're divesting themselves from a position. But if you're buying or selling a large block, it usually affects market prices.
Yep.
Okay. So it's like, if they went in and were trying to buy all the avocados in the fruit and vegetable section of the grocery store, before you finish this, and it's getting smaller and smaller of what's left, the grocery manager is going to raise the prices on what's remaining, because there's such a demand. So because demand has spiked. And so what happens is that investors can get hurt two ways on that buy and sell of large portions. They can get a worse price on the buy sell.
Yeah.
Because of the price movement. And if managers in the fund are adjusting strategies, avoiding their favorite stocks or spreading trades over time just to reduce the impact. So you may not even get the best investment ideas, because the manager might be handcuffed because of the size of their investments. They might be handcuffed by what they can get and how much they can buy at one time.
Yeah.
Okay. And so there might be stuck buying and paying for the price. And
Right.
so that can really affect your gains and losses and what you're getting on those sells and trades.
Okay, that makes sense.
Okay. So the next one is spread costs. So that's the difference between what buyers are willing to pay and what sellers are asking for, the bid and the ask price. Okay. Because funds pay the spread every time they trade. That in between, the difference between those two. So it's worse with small companies or international stocks where the spreads are usually much wider. Okay. So think of it like buying a used car. The dealer pays $10,000, but they sell it for $12,000, right? That $2,000 spread is their profit, right? But in mutual funds, you have to think of that spread, that's what you're paying every time that they make a transaction. You're paying that cost.
Wow. Okay.
Yep.
So basically, if you're with these transaction costs, if you're invested with $250,000 and it's on average 1.44% transaction cost, that's $3,600 a year that you're paying that you don't know about.
Right. You're not seeing that bill.
Yeah.
Yeah. It's just happening through all the trades and transactions happening, but you're paying that cost the whole time.
Yeah.
In all those ways. And that's only, what do we do? ABC so far?
Yeah.
Yeah. There's one more. It's like going to an all-inclusive resort and you didn't know, but every time you went at the pool, you went and grabbed a new towel, you're getting charged $5.
Right. Yep.
Right.
Unless you sneak one.
Unless you sneak one.
Yep.
Yeah.
We were somewhere recently, and they had like a guy checking bags when you leave because people will like steal the towels and stuff.
Oh.
Like he'd randomly be like, "Show me your bag." He'd like go in people's bags.
Dog sniffers.
Yeah, exactly.
Sniffing out the beach towels.
Yeah.
They're not sniffing drugs. They're sniffing the detergent they use to clean the towels and picking it up.
Yeah.
All right. So the last one there is something we call cash drag.
Yep.
Now we have to understand that funds have to keep a large amount of cash on hand for transactions and redemptions.
Yep.
Okay, because people are liquidating and taking money out. People are making deposits. But what can happen is, let's say someone is liquidating and saying, I need $10,000 out of the fund, and another person is depositing $10,000. They can't just make the exchange and say, oh, this guy gave us 10 here. Here's your 10. They can't do that. They have to have cash on hand in order to make those trades. But that means that money is not invested
Yep.
in the fund. So it sits there and makes a lot less interest.
Yep.
Okay, so you couple these other charges we just talked about with cash drag on a portion of your assets, that helps eat into the returns as well.
Yep.
Because you're earning less than what the market could give you.
Right.
So
Which is like crazy. These are just things that people don't think about because you're not thinking about how to run a mutual fund when you invest your money. Like you're not thinking about all the different factors that play into it that make it so that your money, either like cash drag, isn't actually getting the growth that it could be getting in the market because there is those moving pieces.
Exactly.
And like that.
Right.
But it's when you start to think about it, it's crazy. And we're not even done. So
Oh no. This fifth one here, this is the one that usually angers people the most.
Okay.
I mean, for me, it's kind of like when I first learned about this, I was like, really?
Yeah.
It's called the soft dollar costs, we
Okay.
call it. Okay, this is like where fund managers sometimes pay higher trading fees to brokers in exchange for other perks. Like we want some better research, we want to go to conferences, we want steak dinners. There's an exchange.
Mm-hmm.
Well, we're willing to pay a little bit more if you give us these perks as managers. And who pays for that? The investor pays for that.
Right.
They're not paying for that out of their pocket. The investor's paying for that. So it's like, I got my friend's credit card and I'm going to write the tip in and it's bigger than what you thought.
Right.
Right.
Yeah.
Yeah. So soft dollar costs, but those are there. And those are not in any prospectus saying this year we gave this brokerage house higher brokerage fees and they gave us in turn, we went to Ruth Chris 10 more times
Which
this
is
year.
crazy. We're saying all of these costs, they're not in the prospectus. Like they do not have to legally disclose them to you.
Right.
Which is crazy.
It is. And number 6 you alluded to earlier is then, of course, you have your advisor who may be charging you 1%, let's say, which is, industry standard. And I'm not faulting them for that. But I cannot tell you the number of times I've been in an appointment and, people do ask about fees. So what do you charge? And we'll tell them, our flat fee for what we're doing. And sometimes they might go, whoa, my guy's charging 1%. I'm like, well, what is he buying? Well, here's all the mutual funds and ticker symbols. And I'm like, what are you paying for those?
Right.
They have no idea. They're like, well, there might be some cost in there. I'm like, yeah, what is the broker dealer charging that he's with?
Mm-hmm.
They have buildings,
Right.
some of the largest buildings in cities sometimes. They have secretaries. Someone's paying for those things too.
Right.
And then you have all these fees in. So you might see on a disclosure for a fund, our fund made 10% this year, let's say.
Right.
And everyone's like, yes.
Right.
But that doesn't mean you made the 10%.
Nope.
What did you net after the expenses were all deducted out of that?
Exactly.
Okay. So if you add it up, if an expense ratio is 90 basis points, transaction costs average 1.44, cash drag 50 basis points, soft dollar, that 25 basis points, the extra
Them
steak
using
dinners.
your money to fund whatever they wanted.
Yeah, paying higher brokerage fees for favors. And then the advisory fee of 1%, you're over 4% in cost in your portfolio.
Right.
Okay. So,
which is more than advertised most of the time.
right. And because a lot of people are thinking I'm just paying 1% because that their advisor disclosed to them, I charge 1%, and rightfully so.
Exactly.
And so I understand why they have that perception. But just to dive in deeper, no, it actually is more, and you should know
Right.
what exactly where your money's going.
Right.
And over years and years of doing this, you can see how much of your return that could eat into at 3 or 4% a clip.
Oh yeah.
Yeah. And so, if maybe you're feeling like today, I don't know what I'm paying, but after hearing this, I want to know if I'm paying too much or what's going on. And you want to have just a free review of that to see if you're driving a car with 500 horsepower with the parking brake on.
Right.
Right. We would love to, talk to you about that and help you see. And so you can actually know. That doesn't mean you have to make any changes, but at least you know what you're paying.
Right.
But because we believe that in investing, it should be transparent and focused and efficient for you, and keeping as many dollars in your pocket as possible.
Right.
Because there is no free lunch here, of course. There's always expenses, but 3 or 4%, you may find that you can invest differently and pay a whole lot less and get even better results. It just depends on your situation and having the review and just taking the time to learn and find out what's possible.
Because educating yourself on these things, and we're more than happy to have conversations with you about it, is just so important.
Yep. So if you've been listening today and wondering, what am I really paying? You're not alone. A lot of people wonder this, and the vast majority of investors don't necessarily always know exactly what the fee structure is within their portfolios. Just like the Dalbar study showed, that Wall Street is not necessarily in a hurry to let you know what that is. But the good news is that once you see it, you're empowered with knowledge. You can make good choices going forward for your future, especially if you're approaching retirement or already in retirement and looking just for a second opinion. So if you want to know exactly what your costs are, look in the show notes. You can get a link to our calendar, can schedule a free consultation, be more than happy to speak with you and talk with you about this. If you have any comments on this or questions, put them in the comments below and let us know. We'd love to hear from you. Yep, here we are at the end again. But if you've not subscribed to this and you're here at the end, thank you for staying to the end, number one. But if you haven't subscribed, hit that subscribe button and the bell notification so we can be in your YouTube feed every Monday.
It's completely free.
Yep.
And I looked at the statistics. Still 95% of our viewers are not subscribed.
Okay.
So if you enjoy this and you want to consume some extra content, please subscribe. It helps us continue to make videos, and it helps us know what you like and what you don't like. So like, subscribe, and comment. Let us know.
And also lets us know, like you said, the topics that are concerning you the most and things that you want to have be talked about and learn about. So until next time, we thank you again for attending, and we'll see you next week.